Hi there, welcome to Kneppy Invest and Happy New Year. I'm glad we are in the new year. I'm glad it's now the 2nd of January because we've only had 3 trading days in the past almost 2 weeks. And I'm not a big fan of those days where there's no trading. So I'm a happy camper right now. Although, in saying that, went through the announcements before trading began. And I think most management in companies are still on their holidays. Now, before the New Year's, I did ask viewers of this channel to provide me with those companies they think would do really well in 2024. Now, I did ask for at least 20, not at least, at most 20 companies, but I was surprised by how few companies some people chose. In fact, many viewers only chose one company. So they're either very confident of those companies or they didn't really understand what I was asking for. And it's okay to be highly concentrated or highly confident in one company, particularly if that company does really well. But on the flip side, I have seen some people who lose all their money because they're concentrated in only one company. So I did ask the viewers of this channel to provide me with those companies, and now it's time to reveal those companies. Now, I'm not going to show you every single company that was chosen, 145 companies, not all on the ASX. I think it was about 3 or 4 that are listed on overseas exchanges. But what I am going to do instead is go through those companies that were chosen multiple times, so at least twice. Now, I think you did a pretty good job. Some of these companies that were chosen at least twice, and even many of the companies that were chosen only once, I actually quite like. So I think you have done a brilliant job. In fact, one company, I was just having a look at it right now, one company that was chosen 3 times is already up 25%. Go that company. Now, the company that was the most favored among viewers of this channel that came in with 6 picks was a little bit surprising. I was surprised that this company was the most favored among viewers of this channel. So you have to wait for that later in the video. But before we get to that particular company, let's have a look at some facts and statistics about those companies that you have chosen for 2024. 48 viewers decided to provide me with their picks for 2024, which was up significantly from last year, 28. So in those brackets in the red color was what happened last year. So went from 28 pickers to 48. So a significant increase in the viewers who decided to provide me with their choices. Maybe viewers are becoming less shy about voicing their opinions, or maybe there's just more viewers of this channel. I don't know. Now, in saying there's more people providing me with their choices, there were less picks and less companies chosen. So this goes to show you that many viewers this year were more concentrated, only providing with a small group of companies, 1, 2, or 3. While last year, we had some viewers providing me with at least 20 companies, well, not at least 20 companies, at most 20 companies. I think last year we had 2 viewers provide me with 20 companies. Now, when you look at all the companies chosen, so 145, definitely small cap focused, which is sort of understandable because myself am small cap focused. I do prefer small cap companies, particularly small cap companies that are growing. And definitely the majority of companies, if not every single company that was chosen, you could say is a growth company. Now, no banks, no Woolworths, no Telstra, none of those mature companies that are not growing their revenue. And I think that's also understandable because when you're talking about a 1 year period, what you really want to do is pick those companies you think can increase in share price by 100% or maybe even 200%. And those companies are going to be growth companies, particularly small cap growth companies. And I've already talked about concentration. That was a theme this year. So many viewers only chose a few companies. I prefer a more portfolio approach. Choose many companies, but I think it's understandable when you are in this sort of it's not really a competition, but there are stock picking competitions. And in those stock picking competitions, what you want to do is choose 1 or 2 companies that you think can significantly outperform the market, go up 100 or 200%. There's no point in those sort of competitions picking 20 companies because there's going to be some companies do well, some companies not do well, and more than likely by the end of the year, you might be only up 20%. While that person who chose one company could be up 200 or 300%. So, in fact, only 18 people chose one company. Last year, it was only five. This year, only four people chose two companies. Last year, it was two. So, you just see how more concentrated the picks were this year. 16 viewers chose between three and five. Last year, it was nine. And I've already mentioned this. Last year, two viewers picked 20 companies. Not one single viewer picked 20 companies this year. In fact, the most picks was 16, and then there was two others with 11. So more highly concentrated choices this year. I don't know if that's meaning anything, if it's significant. More than likely, it's just a coincidence. I don't know. But it just seems like viewers of this channel are being a little bit more picky or being a little bit more concentrated, going for those companies that might perform really well in 1 year. And if they do succeed, they could say, well, my choice or choices were up 100% in 1 year. Now, apart from that one company that was chosen 6 times, we had 5 stocks or companies chosen 3 times and 17 companies chosen twice. So that means 23 companies were chosen overall with multiple picks. So let's go through these 25 companies right now. And that company that is the most favored company among viewers of this channel when it comes to 2024 is Aroa Biosurgery, coming in with 6 picks, double the next highest. Now, this was a little bit surprising to me that this was such a favored stock. I have been a shareholder of this company in the past, and I think there's a good chance I will become a shareholder of this company in the future because I find this company, Aroa Biosurgery, really intriguing in regards to what they do. And the main reason I'm not a shareholder right now is because they're not profitable and they're still burning through cash. But Aroa Biosurgery, New Zealand-based company, by the way, is a soft tissue regeneration company, and they actually develop, manufacture, sell, and distribute medical and surgical products to improve healing in complex wounds. They have quite a few products that they are selling. About $30 million of receipts in the last half year, but they're still burning through cash. If I remember correctly, about $7 to $8 million of operating cash burn in the last half year. So even though it is surprising this company came in with 6 picks, there is a lot to like about this company, apart from the fact that the company is not yet profitable and is still burning through cash. And if I just wait for that inflection point of this company becoming profitable and operating cash flow and free cash flow positive, there is a chance the share price and valuation of this company will be significantly higher than it is now. But I'm willing to remain patient just now. Now let's have a look at those companies that were chosen at least 3 times, starting with Dimerix. And this is the company whose share price has rallied really nice on the 2nd of January, up about 20%. Last time I looked, I can have a look again, up 19.5% or 4 cents to 24.5 cents. Now, I'm not really surprised that this company was chosen a lot because on the 5th of October 2023, the company announced they had entered into an exclusive license agreement to commercialize DMX-200 in a few different geographic regions like Europe, I believe it was Canada, Australia, and New Zealand with Advanced Pharma. They also gave us some numbers. So Dimerix is going to receive possibly up to $230 million in upfront and milestone payments, plus royalties. Probably should mention that as well. They've already received about $10.8 million of that. The market cap of this company, last time I looked, was not that high. So I don't really think the market has fully discovered the potential of this company right now, even though the share price is rallying as we speak. So not that surprised that this company has made its way onto this list. So another biopharmaceutical company. And I'm not that surprised about Frontier Digital Ventures. Share price of this company is rallying really nice now, right? Really nice now. Maybe not today. In fact, let's have a look at the share price today for Frontier Individuals. And down 6.4%. So maybe if the viewers of this channel waited 1 day, they could have bought Frontier Digital Ventures for a little bit cheaper. But anyway, the share price has really, really nice over the past few weeks. In fact, if we go back to the middle of December, share price of this company was as low as 42 cents on the 18th of December, and now it's 51.5 cents. So nicely rallying the share price. And I think one of the main reasons behind this rallying the share price, not only because of the potential of decreasing interest rates in the future, Frontier Digital Ventures is on the cusp of that really important inflection point of becoming profitable and free cash flow positive on a continuing basis. Not all companies that were chosen by you, the viewer, were small cap growth companies. Some were, well, actually, you probably could define Lavisa as maybe a small cap growth company, but I would actually define Lavisa as at least a mid cap. But definitely ResMed is the biggest company on this list. Not surprising, it made it onto this list with three choices. And the main reason behind that is because of the overreaction from the market in regards to those weight loss drugs that are supposed to be used for diabetes. But I think the market completely overreacted. And I do think a lot of investors understand the market has overreacted. And that's why ResMed is being favored right now, because it does look cheap. Now, my only problem with ResMed, and I am a shareholder of this company, just like I'm a shareholder of Lavisa, my only problem with ResMed is decreasing margins. I want to see those decreasing margins come to an end. In fact, if this company releases their quarterly results in the next month or so, and if they can show the market those margins are not decreasing anymore, you might see the share price absolutely take off, because that fear of what's it called, Ozempic, whatever it's called, I think those fears are now starting to fade away. Now, Lavisa is one of my favored retail companies on the ASX. And the main reason I favor Lavisa over other companies, even though if you look at the P ratio of Lavisa, it is quite high. And the main reason it's high, and the reason I favor this company, is because of their store rollout throughout the world. This company has significant potential because their market is the world. A lot of other retail companies on the ASX can't really say that. And the final company that was chosen 3 times is Zip. I wasn't that surprised that this is or was chosen 3 times, because sentiment in this company, Zip, is definitely changing. It's definitely transitioning from being highly negative to positive, and that's mainly because of the the uh, the excitement around decreasing interest rates. And we have seen share price of Zip rally really nice over the past few weeks. In fact, I'm just going to bring up Zip, down 1.5% today, but 62.5 cents. So 62.5 cents right now. But if we go back to the start of December, share price was as low as 38 cents on the 6th of December. So share price of Zip is running really nice. Chart is looking absolutely brilliant as well. And I think one of the reasons that this company was chosen is simply because the sentiment around this company is shifting, and shifting quite quickly. Now let's have a look at those companies that were chosen at least twice. And I've separated or grouped these companies into different sectors, that sort of thing, starting with health. And it seems like, based off the companies you have chosen for 2024, that maybe the healthcare sector is the place to be, because I would say the majority of companies chosen were healthcare. And coming straight behind healthcare, probably mining. We haven't seen any mining companies yet, but just wait. There's plenty of mining companies that were chosen at least twice. Not at least twice, that were chosen twice. Now, I'm not surprised about Neuren Pharmaceuticals. This company has a lot of positive things going for it. Neuren Pharmaceuticals and Clinical were both chosen last year. Neuren Pharmaceuticals share price has absolutely gone off. I'm pretty sure the share price has increased by over 100% in 2023. Not yet 2024, but 2023. While Clinical share price has gone in the other direction. Now, I'd like both these companies. I hold both these companies, hopefully for the longer term. One company I don't own is Cyclopharm, which is a radiopharmaceutical company. And they just released an announcement on the 5th of December in regards to signing their first USA contract for Technagus, which I have no idea what that is. So this is definitely one company I have done very little research on. I'm just looking at what Technagus is right now. It is a structured ultrafine dispersion of radioactive labeled carbon produced by using dried technetium 99 meters in a 99M in a carbon crucible microfurnace for a few seconds around 2,700 degrees Celsius. The resultant gas-like substance is inhaled by the patient, lung ventilation, via a breathing apparatus, which then allows multiple views and tomography imaging under a gamma or single photon emission computed tomography camera for evaluating functional ventilation Imaging. Sounds absolutely fascinating, but a lot of that just went right over my head. So definitely a company to do a little bit more research on because two viewers of this channel do favor Psychopharm. Another two health companies that were chosen at least twice include EZZ or EZZ Life Sciences. I actually am a share of that company. It's in more small cap portfolio. And I think there is a lot of potential for EZZ Life Science moving forward, and it's still fairly cheap. A company I don't own and haven't done much research on is Imugen, developing cancer immunotherapies. So a clinical stage company developing a range of new and novel immunotherapies that seek to activate the immune system of cancer patients to treat and eradicate tumors. So even though I don't know a lot about Imugene, just reading what they do, I hope this company is absolutely successful. So all the best of luck to Imugene. And this is another company I probably should do a little bit of research on. However, the fact that they're still a clinical stage company, I'll probably pause on that because I'm looking for those companies that are already producing revenue, that sort of thing. So even though maybe not the company for me, I'll still do a little bit of research on Imagen because maybe they could be in revenue within a year. And if they have possibly going to be generating revenue in 1 year, I could be more favorable around this company. Two small companies were chosen, including a company that actually do own, Brookside Energy, which is an oil producing company that have projects in Oklahoma. I do actually still think this company is awfully cheap right now. There might be some shareholders who might disagree with me. In fact, I do on occasion go to Hot Copper to test or gauge, probably the best word, to gauge the sentiment in a company, particularly among shareholders, because most of the time when you do look at the posts on Hot Copper, it's mostly shareholders, not all the time, but mostly. And I do see a lot of negative sentiment when it comes to this company around management, even around the share buyback the company is doing. And to be honest with you, I applaud the management to be doing a share buyback instead of giving their shareholders a dividend, because there's way more value in a share buyback when the company is cheap. They also have like 5 billion shares on issue right now. So I still think Brookside is cheap, but that negative sentiment in the company, particularly around shareholders, is keeping a lid on the share price. But I think the floor is not much lower than it is now, and the ceiling to Brookside share price is quite high. So going from a company I actually do know a little bit about to a company I know absolutely nothing about, Lithium Universe. In fact, I did not know this company existed. So I went to one of their announcements just to see what the company does. The chairman of this company is Iggy Tan. The name is familiar. So I should actually have a look at who Iggy Tan is. The name itself is unusual. But then I had a look at the about section in this announcement. And it says here that Lithium Universe, ticker code LU7, their main objective is to establish itself as a prominent lithium project builder by prioritizing swift and successful development of lithium projects. That's actually really intriguing. They want to be a lithium project builder. So it doesn't seem like they're going to be a miner, but a lithium project builder. So something a little bit different in the lithium universe. Well, that's the name of the company, Lithium Universe. Three bigger mining companies were nominated, maybe not nominated, chosen. In fact, the markup cap of most of these companies, if not all these companies, is above $1 billion. Nickel Industries, Silver Lake Resources, and Luca. I don't know much about Nickel Industries. Nickel. Is it Nickel Industries or Nickel? Is that the right name? Let's have a look. The ticker is NIC. Yeah, it's Nickel Industries. So this company has something to do with nickel. Are they a nickel miner? I don't know anything about them. So let's have a look at one of their announcements, just to have a look. Nickel Industries trialing EV trucks in operation. In itself, that's an interesting announcement. Not that relevant, maybe, but so Nickel Industries owns a portfolio of mining and low-cost downstream nickel processing assets in Indonesia. So maybe not a traditional mining company. Silver Lake Resources is a gold producer. And in actual fact, the other day I was having a look at some gold charts, and Silver Lake Resources chart actually stuck out to me that it looks like the trend in the share price is going from negative to positive. So change in trend for Silver Lake Resources. So I've actually put Silver Lake Resources onto my watch list. And Luca, I'm pretty sure Luca share price has fallen a fair bit because there's been a bit of negative sentiment in rare earths. I'm pretty sure Luca Resources is rare earths. Just having a look at the chart right now. Have a look at the 1 year chart. In fact, yeah, let's just look at the 6 month chart. Share price has gone from above $11 to current share price of $6.62. So possibly one of the reasons people have chosen Luca is just because they are seeing some value at current prices. And possibly I might agree with them. Just have a look at the nickel industries chart just to see if that's another, yeah, this chart, share price of this company has been going down for at least 6 months. In fact, it's been going down since February of last year, decreasing from $1.10 to 71.5 cents. So possibly some people who chose nickel industries did so because of valuation reasons. The next two companies I have classified as rebound companies or maybe turnaround companies, but on that turnaround journey, they're definitely at totally different stages because Appen hasn't turned around yet. No signs of that company turn around. But when you have a look at Nuix and their chart, definitely it has starting or it is starting to turn around. It's been turning around for a while. I have traded Nuix through the year up to $1.92. Insane. So that company had a breakout in July of this year. Share price at that point was about $1.10. So in the last 6 months, Nuix has done really, really well. And so those who chose Nuix thinks this turnaround story has a lot to play out from here. Appen on the other stage, share price has been going down like a rock for about 3 years. 62 cents right now. Has the bottom been reached? I just don't know. Share price in a well-defined downtrend. So obviously, those who chose Appen thinks there's some value in this company right now. I'm not sure if I agree with them just yet. I still think there is possible downside to come for Appen. However, the company did do a pretty big capital raising. This is about 3 months after the last capital raisings. So who knows? Maybe they'll do another capital raising in a few months. But Appen just keeps releasing bad news after bad news. So I'm not calling Appen's bottom in just yet. But it does look like Nuix turnaround story is playing out spectacularly at the moment. The next two companies I'm classifying as high quality companies. There are some people who might disagree with me when it comes to Zero. Some people still won't consider Zero as a high quality company because it has just become profitable. However, they could have become profitable about 5 years ago, but they have been really spending a lot of money for growth. So Zero and Objective. And now Objective share price has been a downtrend for a while. I have been looking to buy. I'm not a shareholder of Objective just yet. I have been looking to buy, and I think possibly it is time to take a nibble with Objective. I was hoping the share price could go below $10, and if it went below $10, I would have definitely taken a nibble then. But the current share price is about $12.50. So I like both these companies, and there are some viewers who think these companies will have a really good 2024. The next two companies I'm classifying as tech, although Wiser is like fintech, that sort of thing, and PlaySide Studios, they build games, that sort of thing. And actually, in fact, I do own PlaySide Studios. Share price of that company is definitely in the uptrend right now. Probably the only negative thing I can think of PlaySide Studios is they're not free cash flow positive just yet. Probably not profitable. They are operating cash flow positive. I'm just looking at the September quarter results right now. Receipts to customers 12.4 million, operating cash flow positive 1.5 million, but they did spend about $1.9 million in intellectual property, which means they're still free cash flow negative. And I think they can become not only profitable, but also operating cash flow and free cash flow positive within the next year. However, the markup of PlaySide Studios is high with this rally share price. I think it's about $200 million, something like that. Maybe even more than $200 million. Yeah, $253 million according to Comsec. So there is a lot of, I won't say hype, but there's a lot of confidence around PlaySide Studios when you're talking about the market. Wiser share price has been on a run lately. So Wiser is a fintech, they're a lender, that sort of thing. So I'm just looking at the About section in one of their announcements. Purpose-built consumer lender with a commitment to improving the financial health of all Australians through providing a smarter, fairer and wiser, hence the name, collection of financial products and services. Now, Wiser share price has been on a really nice rally the last week or so. However, it is down 12.5%. as I speak today on January the 2nd. And that's understandable because when I look at the trade history, it was up 25% on the 28th, 29 or 20% on the 29th, and 52.2% on the 20th of December. Shares traded on that particular day, 101 million shares. Share price went from 2.3 cents to 3.5 cents. What happened on the 20th of December? I'm actually curious now. There was a response to ASX price query. So the company released no relevant or no positive news flow. So it's really interesting to read a response to ASX price query. So the ASX is saying to Wiser, why the share price rally 50% or greater than 50% on massive volume? Have you some price sensitive information that have not released to the market that someone might know, and that's why the share price increased? But Wiser said no, that's not the reason why. They did say, based on market activity, the company believes that a substantial shareholder may have sold down a significant portion of shareholding, which would account for the increasing trading volume. The company is not aware of any further detail. So typically, if someone's selling, the share price goes down, not up 50%. So yeah, so interesting trading in Wiser. Maybe just the chart is the reason why some people chose this company, because the chart looks actually absolutely brilliant over the past week and a half, increasing from 2 cents, that was a low at the start of December, up to 4.2 cents. And the final company that was chosen at least twice, well, not at least twice, that was chosen twice is I always get this wrong, GQG. I always want to say QGQ. Maybe that's a better name, QGQ. But GQG Partners. Funny enough, before I saw this chosen twice, I have been hearing this name quite a bit over the past few weeks. Ausbiz, the core, and other places. Now, this is an asset manager. Typically, I don't really go for these type of companies. That's a sort of a lie. I do own Goodman's Group, which is an asset manager, also a sort of a REIT. But the chart for GQG looks actually pretty good. Share price has rallied from $1.30 at the start of November all the way up to $1.69. I'm just having a look at one of the announcements just to give me. So I'm looking at the funds under management. Funds under management increased from 103.9 million at the end of October to 112.6 million at the end of November. So we should get another funds under management announcement from the company. They released that on the 7th of December. So in the next week, we should get another announcement. So just based off funds under management, things are going pretty well for this fund manager. And that, my viewers, is the 23 companies that you chose for 2024. Well, not all companies. You chose 145 companies, but these 23 companies were chosen at least twice. Is it a coincidence that you chose 23 companies and that's the same number as Michael Jordan's jersey? Is that just a coincidence that these are going to be the best 23 companies in 2024, just like Michael Jordan is the best ever basketball player? For those who think LeBron James is the best ever basketball player, maybe we can have a fight. Anyway, saying all that, if you do have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.